Today is Monday, February 24th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, start with the financial markets where there's been a lot of movement this morning. The coronavirus has taken a toll on this bull market for stock index futures. Do you believe the first quarter of this year will be an up quarter when compared to the closing prices from the fourth quarter of 2019?
Yes, I do, and of course the coronavirus very much a dominant factor, taking us lower. In fact, earlier today we were down on the quarter from the fourth quarter, but now we have come back to just a little bit higher. So I'm giving myself plenty of time, but I do think that the first quarter will be an up quarter, quarter to quarter, and it'll be the low interest rates that ultimately bring us back.
Do you also feel like the coronavirus, what's happening right now, will put additional pressure on the Fed to lower rates?
Absolutely. Right now it looks like there's at least an 87% probability that the Fed will be cutting rates at the September meeting. Other central banks around the world are showing the same pressures where they have to add more accommodation or ease credit in one form or another. So a lot of easing is coming from all of the major central banks globally.
But most likely not until the fall.
Yes, not right away. This will be something later that the Fed, I believe, will be doing.
Now, what's the effect on the U.S. dollar and your outlook for the greenback?
Now, the dollar has continued to advance. It was just a few days ago that it made a 3-year high. The dollar is receiving some flight to quality buying. Also, interest rate differentials tend to favor the dollar over other currencies, and that even though the Fed is likely to cut rates, other central banks, I believe, will be more aggressive in lowering interest rates. That is a recipe for continued gains in the dollar, and I believe the dollar index next objective is around the 100 level.
With the Dow down 800 points today, no surprise that gold futures are rallying this morning. We've advanced to a new 7-year high today. Will the bull market continue for gold futures?
Yes, I believe it will, and oddly enough, normally gold does not advance when the dollar index is advancing in price, and of course the gold market has been very strong. Also, we did break out of some major congestion patterns earlier last week, so the fundamentals remain very bullish to the gold market, not just the coronavirus influence, but interest rates. So my next objective is 1,700 in the gold. But that's just the next objective. I think there's a lot left price-wise and time-wise to the upside in gold.
Thank you. Steve, let's turn to the grain markets. What did the USDA say at their annual Outlook conference, and what was the market reaction from that?
First, they said that 13 million acres that wasn't planted last year will come back into production this year, mostly soybeans. They lowered the wheat and soybean carryout for 2021, but raised the corn. After an initial positive reaction, the markets closed lower because of the concern about lack of export demand, especially to China.
The coronavirus is certainly affecting the stock prices. What's the impact on grain prices?
We've dropped soybeans from $9.10 to $8.80, and now if we break new lows today sometime, we go down to $8.50. Corn market has dropped May corn from $3.87 to $3.73, making new contract lows, and the wheat market has dropped from about $5.68 to $5.35. Part of the wheat drop is also due to the higher dollar.
The NOAA released their spring weather outlook for the U.S. Midwest. How'd that look, Steve?
Wet spring, and so the continued weather we've seen over the last 3 years is expected to continue in the spring of 2020. It's not going to be as wet as it was last year.
So should end users be buying this price break, Steve?
I think that when we look at meal prices nearby around $290 a ton, corn at $370, you might want to nibble at that. I don't know if we've priced in 100% yet the coronavirus, but those prices look attractive. I think the market is still hoping that we'll get some kind of China or weather rally later on in the spring. Maybe not a significant one, but these prices for those two commodities are pretty good.
And what should farmers do?
I think for the most part, farmers are going to have to wait and look for this kind of bounce in the marketplace. You know, about a week ago, or actually at our January annual broker meeting, David Hightower said, sell futures and then use that money to buy cheap calls, and then when we do get a bounce, sell the cash. Well, you can't really sell the futures here. The calls aren't cheap to replace any inventories that you decide that you either want to sell or have to sell. I kind of think that 9.30 on the May beans, 9.50 on the November, $4 May corn and $4 Dees corn are objectives in which we might look at for farmers to sell. And then we've seen a drop of 6 cents a pound in soybean oil. At 36 cents a pound, the May oil was, we were going to run out of palm oil. We were going to run out of oil. China was going to buy all this oil. And now we're at 30 cents. And I think that once the virus is under control, that's a market that should be bought.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.